It's Thursday, June 2nd, 2016. I want to talk about volatility today, and the markets. Volatility for the stock market usually basically means, how sharply the markets move up and down on a daily basis. And for stock markets and indices and equities, when volatility is higher, it means that the insurance cost for markets are higher. That means it will cost you more to buy options to hedge yourself, puts or calls, and it's usually a sign that the market is dropping. Back in 2008, volatility, as measured per the VIX index, spiked to 80. Recently, volatility has spiked, but to just under 30 last year in the summer when we saw the stock market come off quite a bit, and also beginning of this year, we only spiked to around 27, 28. But back in 2008, when we had the final collapse into 2009, volatility as measured by the VIX index on the S&P spiked up to 80 almost. And for the last few weeks or months, so to speak, since the February low, volatility is dropped from above 25, and it's been hovering at very low levels, just below and above 15. And I'm wondering, if we're just about to see volatility, explode. And that would mean the market coming down, the stock market. There has been, of course, a lot of calls for imminent collapse or crashes. And I have spoken about that. And it seems, quite frustrating that the market just hovers and stays up at elevated levels as it has. But let me assure you that, the death cross I talked about a few weeks ago, where the 50-week moving average crossed below the 100-week in the S&P, that's still in play, the death cross. And, looking at the charts here, for which I'll put a link below. You can look at them. We'll click to the link and look at the charts. The volatility index, or the VIX index chart, if you look back to 2011, it hasn't really dropped. It has dropped, towards 10, but not many times. So I would say we're very near the lows in the VIX. There might be a little more downside to the VIX, which would mean the stock market going up, but I'm not too sure. I think, look at the chart. I don't think there's much more downside, and it'll be interesting because, if you go all the way back to 2001, volatility in when we had the dot-com crash, went up to around 40, that was the high. And then in 2008, we had the spike up to 80. So it's volatility is exploding higher when we get crisis. So it'll be interesting to see, if we break the fear or the volatility index, and if we do have something happening this summer. And today we've had the ECB come out. They've announced that they're going to start buying corporate bonds. So, they're trying more of the same. I don't think it will work. It's just artificial credit. And I think more and more people are starting to lose faith in central banks, not only the ECB, but the Fed. And credit, the word credit comes from credere in Latin, which means to believe. So I think, the credit market will show the first cracks, because that's where you create the illusion of wealth or value. The central banks do, in my opinion. And the as far as gold, we have held the 1200 level, and I'm looking here at now at the gold volatility index in the CBOE, and that has been coming down. Actually, in gold it's a little different. It's when the gold price goes down, volatility doesn't really necessarily go up. It did in 2013 when we had a big crash in gold. I think it was around the April time. Gold I think dropped over $100 in one day, like 150. Then volatility jumped. But since we've made the highs in May, we traded above 1300. The CBOE gold volatility index, which is based on the GLD, which is an ETF, I know, but this is a way to measure it. This measured volatility in gold has dropped from above 20, and it's now roughly around 15%. And that seems to be a bottom for this measured volatility in gold. And so are we near a bottom in the gold price and the top in the stock price? And is that what volatility is showing us? Maybe. And this could drag on for weeks, so I'm not saying it's going to happen today or tomorrow. But if anything, we're more pointing towards a bottom in gold right now and the top in the stock market. I know it's been frustrating, not only for people who are bearish in the stock market or bullish in gold, but even people who are bullish in stocks, because, to really go long more stocks, I think we need to make a new high above 18,300, and we haven't seen that. And so yeah, I mean, there's not much else to report at the moment. We are waiting, of course, for a non-farm payroll tomorrow. That's going to be a key number. It's going to help the Fed decide whether they're going to hike rates on the 15th of June, which is another key event. And yeah, that's about it. I hope you enjoyed this video. If you haven't subscribed yet to my channel, please do, and share this video if you enjoyed it with friends, colleagues, and family. Thanks for watching. Take care.